A massive day for GME as our statistical targets start to realize two independent formations and two distinct linear volatility timeframe backtests were the signals to tell us what the probabilities and targets were today. Let's pop open the hood to observe the potentials for the coming sessions ahead. Welcome back to the channel on this Thunder Thursday. This is ARCa, and let's dive into GameStop. Let's kill 'em, team. What is up, you guys, and welcome back to the channel. This is ARCa. Please make sure to like, subscribe, do everything necessary here to get this thing to thrive and survive. So we are going to look at GameStop here in the 12-hour time frame, and we're back here with the ape and the red bandana to show our respect to the GameStop apes, right? So let's go ahead and get this thing rolling here. Please notice right on this 12-hour chart here that we made a massive rip from $16 all the way up to that $18.51 level. Actually, yeah, 1851 before retracing in the after hours. Right now, we're sitting at $17.85. Please remember that these targets were already given to us by two different formations, just like I said in the intro, and also two distinct linear volatility versus stochastic momentum backtests, right? This is my linear volatility indicator right in here, and this is actually the stochastic momentum indicator right over there, right? So those are the tools that were used here to determine how this upside was going to happen, right? So we ran a daily backtest, and just to kind of remind everybody, right? This is your daily time frame backtest, right? Anytime that volatility starts to, anytime that volatility enters the critical point of expansion here at the 90%, we were able to capture any single time or every single time there was an upside thrust from that very criteria using linear volatility, right? So that is how we were able to determine one set of targets. Now, if we just go ahead and block the visibility here from the daily time frame, you're going to notice here that this is the 5-day backtest, of which we also collected our data, and we also created, the statistics sheet right here, right? This is the data set, and this is what's also telling us that we were going to experience an upside, right? So what we're doing now is combining the 5-day time frame backtest alongside the daily time frame backtest, and it just so happens that a lot of those targets were very, very familiar, and they were very much confluent with each other, right? So let's go ahead and get rid of that drawing here and take a look at the rest of the analysis here, right? So yeah, we were able to determine here that we were going to see a potential 1923. This is your daily backtest. This is your 5-day backtest. Your 5-day is firing off slightly higher than your daily backtest, right? So that we had confluent targets almost all the way. Okay, so now we have targets coming up to that 1923 to 1918. We had 2311 to about what was the top side target? 2365. Which was the upper bound of the second standard deviation of the upper bound of the third standard deviation of the daily backtest, followed by the upper bound of the third standard deviation here on the 5-day backtest, right? 148% upper bound of the third standard deviation led to 148%. All right, so that's how we were able to determine here the targets that we had. Now, what are we doing as far as confluence, like other than statistics meeting that confluence and also using geometrics like the Fibonacci retracements here? Like you can see the $20.68, 1.618 golden mean is very much confluent to the backtest on the statistical side of the analysis using volatility, right? So what are we doing now to determine the potentials for continuation, right? Like what do we have in line for or confluence between the other targets, right? So this is what we did here. So let's take a look at this formation here. This is a 3-day time frame falling wedge, right? Falling wedge targets, you have 3 targets. You have a breakout target here, right? Taking a trend line from that top end of the regression to the bottom side, the middle of the triangle, and the rear end of the triangle. Those 3 targets here are listed right up here, right? So these targets were given to you like this. $18.96 was the first target that we were to realize that we would be realizing here. based on the breakout from this formation. Usually the triangle family formations tend to break out at about 65 to 75% of the apex, right? So please go ahead and take a look on the chart right here that we are just at about that 70% zone, and we got that breakout to the, 70% to the apex. So we got the apex, we got the breakout, and we were already determining that we had an 1896 target. We got 1851 today. We freaking nailed it. All right. Good job to those who ended up following here because we're doing good. Oh, yeah. Right. So now let's go ahead and see what the further targets could be. The second target here, this is your 2056, and your upper bound target from back here is 2678. Right now, this, because we had a failure down here in price action, becomes a wolf pattern. So the wolf pattern is then measured by waves. This is your wave 1, 2. This is your wave 3 and 4. Connect waves 1 and 4, and that gives you some statistics, some targets. Please notice that we had the 2056 in line, and we also have the 2479 and the 2678. We have confluence between all those targets right there, right? Now, if we come back here to the statistical side of the analysis, noticing that this is $19 to 27 bucks, what's the stats telling us, right? So check it out. 19 bucks to about 27 bucks, right? Good job. So this is how we were able to tell that we have some confluence with targets. Now that we were able to determine that, let's go ahead and see the continuation for tomorrow. So for that, let's go ahead and pull up the immediate short-term time frame here. We're gonna observe the 5-minute backtest, right? Let's look. The 5-minute time frame, sorry. Okay, so price action here essentially made this huge ripper. We're being guided by the EMA 7, EMA 9, and SMA 5 orange line, and you can see here that we're starting to meet your 20 period simple moving average in the post hours, right? So if there is a pullback on this, there are two possibilities, okay? Well, honestly, there's a bunch of possibilities, but we're going to speak on the ones that are very important here, okay? So let's go ahead and take a look at this point right here. Let me get rid of the moving averages for now and take a look at this point right here, right? Usually when price action makes this big upside thrust and we pull back and we have this base down here, this base before the upside and then consolidation or whatever that is, that tends to be our inflection point, okay? So let's just go ahead and note that off right there as our inflection point. Any closures, major closures, like actually in maybe an hourly, 4-hour candle closure beneath this level here would cause price action to continue to the downside here. But I will say that it's not the end of the world if we did come back down. In fact, I almost encourage the downside first. And why the heck would this freaking ape ARCa be saying that we should encourage the downside first? What kind of crap would that even be, right? So let's go ahead and find out why. This is why. So please take a look in the charts right here. We have huge tests in this area. Let me go ahead and just kind of pull out like this here and use this. We're going to delete this fib because we already got the entry signals here and everything, right? This one too. So if you're noticing here, those confluent tops, you can see that we've tested this 1740, 1745 cent zone over and over and over and over and over. Usually when we test that resistance 3 times, the third time, in reality, it really is 1722, right? So 1722 right here, we got a test number 2 right there. Test number 3, rejection here. Usually test number 4 and 5 tend to be the breakout, the true breakout tests. So we have test 3, we have test 4 here. We failed test 4, and then guess what? Test number 5 pulls it off. Just in case there is a pullback, we have a range already kind of identified here in order for us to determine that higher probability newly converted resistance into support. So it was a resistance, right? We're resisting here. And now that we've actually made an upside move, we can then come back and validate this as a form of support for price action to bounce before a continuation onto that upside. So this is actually why I'm telling you that that it wouldn't be the end of the world if we actually had price come down, validate that bounce, and then get this thing to rip to the upside. So is that likely to happen? Well, let's use volatility versus momentum to take a look. Let's go ahead right back into that chart and take a look, right? Let's see. Okay, so here's your volatility versus momentum profile right up here, and it looks like the 5-minute immediate short term is still suggesting an upside. You know what? In this case, let me just go ahead and dive into a more granular level. And there you go. Your 2-minute time frame does show a downside here. Let's go ahead and type in the 3-minute time frame and see what's up. 3-minute time frame also is kind of forcing or being impacted by the 2-minute time frame, which is also by the 1-minute too. So we're cascading with a downside here into the 5-minute time frame. This is why I'm saying that we could find some support in this zone first, okay? It's not necessary. It's not absolutely necessary for us to pull back down to this area of 1722 to 1745. It's not necessary. It is probably just better if we ended up doing that anyway, okay? Because then we have validations, we have confirmations, we can actually pick up some pro traders down at this level here and have this thing continue on, right? So let's go ahead and now take a look at the RSI and see if we have any of those downside pivots here with an immediate bounce, right? So let's see. Let's go to the 3-minute time frame. Let's go to the 2-minute time frame even there, and the 1-minute time frame. They're all still pivoted towards the upside, right? Nice. Okay, let's go to the 10-minute time frame. Okay, so if the RSI is giving us immediate short-term upside, that means that we're going to be able to find resistance somewhere. Now, where would that be? Wow. Okay. No way. I'll speculate. Hold on just a sec. Almost there. Oh, man. Nice. This is all upside. My goodness in heaven. Well, there it is. All the way to the bi-monthly time frame. The bi-monthly, I mean, we are right there anyway. So the bi-monthly time frame still has more upside to go, but I will say that this, I mean, look at this, right? We closed this formation down here at about $11. And then this jump here is consistent of $11 to $18. So the space that we have from this point to this point where we can find resistance is probably around $22, $24, $27. So guys, we're gonna have to kind of practice here in kind of a technical type of discretion for us to validate or see a potential pullback, right? So I mean, we're already getting it, of course. So the simplest way to do that is to observe your current top. Right now, you know that we have an 1850, but you can see that the post hours did print a different high here. It's an 1840. So let's just go ahead and mark off the 1840 here and the 1851 new high that we just created as an area of likely resistance before we come back down and start to validate some areas of support. Now, I will say that because of the massive upside that we just got, there is a probability to even go to go, you know, even lower, right? I mean, if we do go lower, there are the relevant supports everywhere else, right? We have one here at 1667. Let's just go ahead and mark it off just in case. But if we pull back here and we're able to respect some supports, it may not come down, right? It may not come down too far from this 1760, maybe into the 1722 to 1745 before a continuation to the upside. It even looks like we're building a bull flag here on the hourly time frame. Very nice. Okay, so please remember the targets that are coming up after this, right? So now that we broke out from this ascending triangle, it was a multiple day inside bar formation here before we got that upside. Lots of and then also the bull flag formation. This is a quadruple. Or it could even be a triple. Yeah, I mean these are all the bullish formations, right? So when they stack on each other like that, it just kind of it gives a bias towards that direction. In this case, we had many bullish formations, and that's what it is. And honestly, that's really what GameStop is all about. It's right now, it's not really fundamental unless someone knows something, but this is just a behavioral statistical setup. It's a technical breakout, and this is why a lot of the technical traders were able to identify this before any of the other fundamentals, is because it has a particular criteria that tends to repeat every once in a while. And this is what it's been doing, right? So this is why. So, yeah, what I ended up, I do call this something, right? For the ARCa Bulls trading team, we call these triple or quadruple bullish breakout formations, right? So we have the, we can have buy formation breakouts, right? But these are quadruple formation breakouts, or maybe even a triple formation breakout. But yeah, more often than not, we're able to see those buy formation breakouts. They would be bullish or bearish, and that's how we identify higher probability moves, whether they're to the upside or to the downside, right? So yeah, very nice print here. Huge green outside bar, and this is likely to continue. Look at the price right now. As price is still going as we speak here, right? It's going to be closing in about 2 hours. We're in the post hours right now, 3 p.m. Eastern time, 6 p.m. Eastern time, 3 p.m. Pacific, and we just touched on an $18 zone, and we're kind of retracing right now, right? So very, very cool stuff. We still have about an hour and 58 minutes to close this candle, so there could be still more continuation to that upside, team. Okay, so you now know your upside targets and the bottom side support areas before we can continue on to the upside. All right, team. So please remember, I am consolidating my 19 week beginners charting program down to 4 to 5 weeks. Okay, so please go ahead and get in touch with me at ArcMastersCourse at gmail.com. Right, and what that's going to do is that it's going to send me an email, and we'll be able to share with you the syllabus and course material, disclaimer, and all that stuff. Now, for my more advanced traders, we also have a strategies 8 to 12 week mentorship in identifying statistical setups, formation theory, patterns, all that good stuff. So please make sure to get in touch with me at ArcMastersCourse at gmail.com, and we'll go ahead and get you situated. All right, team? But I think this is it for the day today. If any questions or concerns, you already know where to reach me. All right, team? Thank you so much, and I wish you and I bid you well. All right, team? Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Never, 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 ever. I need you to do your own due diligence, and everything will be cool. But with that said, team, I wish you well, a very, very good rest of your night and or day, and I will catch you at the bell mañana. Adios, team.